Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to Wealth Matters podcast. This is Monday section, so hope you guys had a nice weekend. I want to again talk about cryptos. And why cryptos? Because I have been investing in cryptos since 2015, 2016, and I also have a lot of money invested through my Bitcoin mining funds and of course directly in cryptos. So I'm always looking at the market, trying to decipher what's going on. Of course, the market is going through a rough crypto winter. I was recently listening to Reuters news where Sam Bankman-Fried, the FTX CEO, mentioned that he believes he may have reached the darkest depths of the crypto winter. Hopefully, this crypto winter will end soon. I'm not sure. I think this year, 2022, pretty much will hang around this $20,000 Bitcoin price. It may go back down to 15, 16 grand in between and then come back. So let's see what happens. But what Sam Bankman-Fried did recently, he tried to bail out a lot of companies, and what he said his main motivation with bailout was to help protect customer assets and stop a dreaded crypto contagion where one company's collapse has ramification for others. So I wanted to understand what happened and everything. Of course, the stock market started correcting. A lot of then crypto, a lot of commodities, whatnot started correcting. In crypto world, though, it started with Luna and Terra collapse, which I have covered in an earlier video, so I'll recommend you check that out. But because of the Luna and Terra collapse, a lot of things happened. And basically then came the saga of Three Arrows Capital, which I will refer to as 3AC in this video. After that, we heard about how centralized finance businesses like Celsius, Voyager, BlockFi, and many of this became too greedy and they had over-collateralized loans and they had loaned money to 3AC and many other funds, which caused another liquidity crisis. And that's why Celsius, Voyager stopped withdrawal. So basically, they don't have money for us to withdraw. They don't have Bitcoin or Ethereum for us to withdraw, even though we own that Bitcoin and Ethereum. So, of course, in shorter term, I will recommend. I still have money in some of those exchanges, but I'll recommend if you still want to be in crypto, maybe set up your hardware wallet, which I have covered in my last video, and go through the setup and pretty much transfer your Bitcoin or Ethereum from some of these exchanges. The collapse of 3AC, Three Arrows Capital, in and itself is unremarkable. A hedge fund that was previously successful executing boring but stable yielding arbitrage strategies decided to strap on leverage to accelerate returns and paid the price. The use of borrowed funds to play the Terra USD carry trade sealed their death sentence. So how the carry trade worked was very simple. They borrowed USD at less than 20% interest. Then they would convert USD into UST, which is the Terra version of USD, deposit USD into Anchor protocol and earn 20%. No brainer, pretty easy. And I was doing the same thing as well. So annualized unrealized profit for them was 20% minus the borrowing cost. Maybe the borrowing cost was 5%, maybe 6, 10%. So that was their profit. To realize the profit, they would do the exact reverse thing, right? Withdraw USD. And the interest in USD from Anchor, convert USD in USD, pay back the US dollar loan, and whatever is left is the profit. So that's what they were doing. But of course, when Terra and Luna collapsed, pretty much USD turned to zero, right? What made the 3AC default so impactful is that it blew a well shark-sized hole in many of the largest centralized crypto lending businesses. Due to losses on 3AC loans, many of these lending businesses have gated customer funds and become functionally insolvent. The withdrawal of credit from the crypto ecosystem has caused a generalized market crash of Bitcoin, Ethereum, and the whole pantheon of shitcoins. No coin has been spared. So this has been, and this macroeconomic headwinds are explaining a lot of what we are seeing in the crypto markets. But a lot of what is happening is because of a downward spiral of, as I said, liquidations and the use of leverage in the markets. One of the significant factors of this downturn, which I said Terra and Luna, right? You exactly know the story, and what I mentioned here, 3AC. 3AC at its height had $18 billion in assets under management, but was down to $3 billion in assets by April. It has significant exposure, about 200 million to Luna, and had a few leverage positions in Ethereum. With Luna going down and Ethereum suffering a significant contraction in price, many funds and investors like 3AC had their positions liquidated. This is forced liquidation. Many investors and funds like 3AC had used BTC as collateral, right? So basically you start with Bitcoin or Ethereum, you use it as collateral, you take the loan, then you go back using that USD loan, you buy USD or whatever to accelerate your gains, right? With the downward pressure from falling prices, there was a significant amount of forced selling to cover these loans, right? More worryingly, companies like Celsius and Voyager had used their customers' deposits for leverage investments, which caused significant downward pressure. So you exactly know, and if you have been following me for a while, you know I'm very bullish still on Bitcoin and Ethereum. The volatility we are experiencing has nothing to do with a loss of faith or confidence in the fundamentals of these world-class assets. It's a liquidity crisis. Many investors use Bitcoin and Ethereum as collateral for loans across the entire crypto ecosystem, which I had also personally done on Voyager. I took the loan using BTC, and then I bought Solana, Terra, etc., trying to maximize my gain, right? So in crypto, basic BTC and ETH are premier assets in the same way that US treasuries are the premier assets of the traditional financial system. In traditional finance, Wall Street firms hold US treasuries, right, and borrow against them because they are widely considered the most secure financial assets. So same way, investors use Bitcoin and Ethereum, right? So some of the biggest names, as I said, Three Arrows, BlockFi, Celsius, Voyager, whatnot, they are all centralized finance pretty much, or hedge funds, and they were using Bitcoin and Ethereum for leverage. Actually, looking at all this, I believe that centralized finance has caused this issue, right? Terra Luna as well, pegged to US dollar, USD, but it was pegged using algorithm and they were managing it, right? So someone was managing it. So that is the biggest problem. Centralized finance companies use decentralized finance, DeFi, protocols built on blockchain technology to make banking, borrowing, lending, and investing more accessible and cheaper for millions of people. And the problem is not with these protocols. Problem is the amount of speculative leverage bet CeFi, centralized finance firms like BlockFi, Celsius, Voyager, and others piled on to this protocol. The DeFi space works by taking in collateral and issuing loans against that collateral for borrowers. CeFi firms like Celsius took deposits from the public, from us, and then used that money to generate yields from DeFi projects. The problem was that CeFi firms got greedy and used leverage to magnify their returns. This approach worked until it did not. The first domino to fall was Terra Luna and USD collapse, right? Many CeFi firms had huge positions in USD and Luna. They had used those positions as collateral to support billions of dollars in other loans. When the prices of Luna and USD collapsed, it triggered massive margin calls. This then put pressure on other assets that had nothing to do with Luna and USD. That selling pressure then triggered more margin loans. This then set off even more margin calls. So, it's pretty much daisy chain of defaults. So what I believe DeFi will be fine. CeFi not so much. DeFi, decentralized finance protocols like Uniswap, Aave, Compound are open and transparent. You can see exactly what's happening under the hood anytime. CeFi platforms like BlockFi, Celsius, Voyager use DeFi protocols to generate yields, but private companies own them. They are not transparent. There is no way of knowing how much leverage they are using, right? So pretty much we don't have any clue unless they start becoming transparent. We would not understand how CeFi firms are over leveraged or under leveraged. So like in 2008, CeFi firms and crypto hedge funds have found themselves holding highly leveraged positions collapsing in price. This forces them to sell their Bitcoin and Ethereum to cover their margin calls. And I don't think this cascading effect is over. There will be more pain coming, right? Right now, I want you to know this centralized, decentralized protocols function as intended, like the DeFi protocols. While they have seen that token prices pull back with the overall market, but DeFi platforms like Uniswap and Aave have not collapsed. They are still facilitating trading 24/7. So it's very important to distinguish between truly decentralized platforms like, as I said, Aave, Compound, and centralized parties using DeFi protocols like Celsius, BlockFi, Voyager, Nexo, etc. DeFi will survive and thrive. We don't know about CeFi or centralized finance exchange. Finally, I know you are wondering when the market will rebound. I don't have a crystal ball, so I can't answer that question with certainty. It will be volatile. It doesn't matter what asset you invest in, sooner or later, panic will take hold and crush prices. You can't avoid them. I think just wait for the market, right time, get in, buy uniform sizes, small sizes, if you believe in it, right? If you don't believe in it, then you are merely a tourist in the crypto world. And when I say tourist, means you are a visitor. You try to buy when the asset is going up and you get out when the asset is going down, right? But the people who believe in, they call them as hodlers. They will stick, as long as they have not over leveraged as well. So forced selling and liquidity crisis are the two biggest things to watch out for in near future. Let me know what you guys think of this video, and let me also know what you guys think of cryptos, and if you are planning to buy or sell.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!